Mr. Vu, over to you.
Good afternoon, everybody. So we will start our presentations with the macro indicators and business strategies of VIB. Definitely, we will bring you to the indicators which are most relevant for impacting the performance of Vietnam economy in the next 6 months and having the impact on how the VIB direct its business strategy. So first of all, I would like to touch the biggest economy in the world. So the US GDP expected to rebound with the Fed rates forecasted to remain elevated. So if you look at the graph, the chart on the left-hand side, the economy of the US amid of various uncertainty in the world, still stable at the growth rate of 2.2% expected, forecasted for this year. And Fed is going to tend to keep the rate at the level of 3.5 or 11 or even the 3.75% for the remaining part of the year. For Vietnam economy, the good news is since the beginning of July, World Bank categorized Vietnam economy to be the upper middle income by its definition. So if you look at this, of course, this does not happen overnight. It's a consequence strong growth of Vietnam economy during the last years. And we are just taking the 3 quarters from the quarter 4 of 2025 up to now. So the GDP growth of Vietnam is much higher than the neighbor, the Thailand, as you look at the left-hand side, and significantly higher than the other countries and economy like Malaysia, Singapore, Indonesia. So for the first half of the year, Vietnam is 8.2%, the highest among the GDP growth rate in the ASEAN country, with CPI maintained at 4.4%, a little bit lower than the target of the leaders of the country to be 4.5%. The financing rate of central banks is kept at 4.5%, while exchange rate is well controlled from the beginning of the year around 26,300 compared to US dollars. So how about the banking industry in Vietnam? So it's important to say that the growth of the credit is positive at 8.4% versus the target by the central bank to be the 15% for the year. And you look at this, it seems to be the lower than the actually growth rate last year of 19% of Vietnam credit. But keeping in mind that the political strong will to have the GDP grow by 2 decades, we believe that this 15% may be considered by the government and central banks. Similarly, as what happened in 2025. Deposit growth is lower than the credit growth, which is not something unusual because it is still the case during the last 5 years. In the meantime, exchange rates and policy rate of Vietnam maintain quite stable, as I mentioned in the earlier slides. But expectedly, the exchange rate might be under pressure to increase with the devaluations of Vietnamese dong. depending on various factors from now until the end of the year. Some takeaway from what we just reviewed in terms of the macro indicators for the first half of the year. In terms of growth, 8.2% in the first half, which is the best first half of a year since 2011. And this growth is coming from broad base of industries, i.e. we can say there are some industries which contribute importantly to the GDP growth. But if you look at the contribution, it's quite a broad-based growth across the industries. The government, of course, has announced from last year, they would like to have 2 decades and higher for the GDP growth. And we tend to think that at the end of the year, somewhere between the 8% to 10% is already considered as successful for the efforts of the economy, keeping in mind various uncertainties in the world, like the war in various areas, or the possibility of elevating the tariff of the US, which is the biggest exporting the markets of Vietnam. Interest rate is kept by Fed around 3.75%, reinforcing the cautious policy stance. And similarly in Vietnam, the central banks maintained the rate steadily. But the pressures on the increasing of the deposit rate on the markets due to the outspace of credit versus deposits. In terms of exchange rate, Vietnamese don't remain well managed in the first half of the year. But the pressures for depreciation is quite high, keeping in mind that the outflows of the indirect foreign indirect investment and the deficit of the trade balance of Vietnam. But of course, the good news is this deficit is still based on the strong growth of the export of Vietnam. In terms of banking, the system, the credit is growing the 8.4% as mentioned earlier versus the 15% target. The credit in the real estate area is still under the very close monitoring by central bank, although this is an important contribution to the growth of the GDP. And the Central Bank of Vietnam still following the best practice of the world in terms of how to manage the banking the industry in the country. Late 2010s, they already applied compulsorily Basel II for all the banks. And likely in the next 12 months or so, there are some like a piloting for applying the Basel III with IBR, the rollout. And that will be continued with the issuance of new regulations to ask banks to apply this compulsorily later on. With all of this, we would like to draw you, bring you to the VAB, the focuses and its direction of the strategy in the coming period of time. And I would like to stay on this line a little bit longer with you, reviewing what happens in terms of various development phases of VAB during the last 20 years. You may recall that between 2007 to 2016, we call it VAB in the phase 1. VABs have a dramatic change in terms of shareholding structures. We have the phasing out of all the equity and stake from the state-owned banks in VAB. some important Vietnamese shareholders also withdrew, while the CBA become the strategic shareholders of VAB. So we also, this period of time, we also had a change in terms of strategy of the bank. We changed from a focus in corporate banking into retail banking. And also that we need to, and at that period of time, we saw the issue of the crisis, 2007, 2008, and 2011, 2012. And we call this period of time as the preparations for the VAB 2.0. And 2.0 started from the 2017 until today, with dramatic change in the structures of VAB in the balance sheet, where the retail banking is the dominant factors of the bank. We are almost in the leading positions in the various retail products, from the auto finance to card to the banca distribution during this period of time. Also, we have, because of the limited credit rooms, we focus a lot in terms of allocating the room for retail to grow. So at times, the balance sheet of VAB having close to 90% of the loan books for retail banking. And the result is we have 6-7 years with a very positive return on equity of between 28 to 30% every year. We are now going into the new phase, which the bank preparing for is the third version of the bank. We call it VAB 3.0 from next year. And during the last 3 years, we are preparing for the new version of the bank, keeping in mind the fact that when the banks at a certain size, like the size of VAB, having the very dominant part of retail in the book may not be the best in terms of productivity for the bank. So during the last 3 years, we are gradually preparing for that, changing the structures and having the corporate and institutional banking to occupy now around 30% of the loan book of the bank. But more important, we are preparing the foundation for that. And this will be presented to you in the coming slides by me, and especially by our colleagues that you will see soon. For this new period of time, that we are still targeting to achieve 20 to 30% growth in the key performance indicators of the bank. We are strengthening and enhancing the retail banking foundations, which we already built during the last 10 years and more, through comprehensive personal financial solutions. We are selectively expanding the corporate customers segments while strengthening the roles as the transaction bank for our customers. We also accelerating the comprehensive digital and technology transformation to enhance productivity, customer experience, and decision-making speed of the bank. And as the financial service provider, of course, we are making the strategic investment in high-caliber talents of the bank. Retail banking strategy that will be presented to you in details by my colleagues later on. But in overall, for the coming years, we target to be the top 5 retail bank by profit among the joint stock commercial banks. And similarly with the whole bank, to achieve 20 to 30% annual growth across business metrics of the segment of the area. We are positioning ourselves to be number 1 in target customer base growth, reaching the 10 million customers by the end of this year. and to be number one in credit card credit card market in force by the active credit card in force and the total card spending, which we consider is quite target at the reaching hand, keeping in mind that for years we are among the very few banks with more than 1 million credit card active, and we have been already the number one in terms of spending per card. We are positioning ourselves as a top of mind choice in the privileged banking segment, which we are starting not long time ago, and to be the first choice in transaction banking. In terms of value propositions, we are targeting to be the leaders in products and solutions driven by our innovations and personalized customers' experiences. Also leaders in customer experience, i.e. at least by speed, convenience, and accessibility to our service by our customers, and leaders in the creating benefits across VIB customers ecosystem. An overview of corporate and institutional banking for the coming 5 years. In terms of customers, we are establishing the target customer segments and diversifying the ecosystem of the bank, which facilitate the wide cooperations between the retail, wholesale banking, and treasury efforts to provide the most valuable solution for our customers. Also, we focus on the financial strong corporates while maintaining the prudence towards high-risk sectors. In terms of products, we have the next slide to be in more details, but we are diversifying the product offering for our corporate customers and driving the growth in the CASA, fee income, and transaction banking, which is very important for the bank. Risk-wise, we are strengthening the risk management with a tight governance and implementing the early warning mechanism and proactive recovery process, which is not only important for retail, but for corporate as well. Although this, I may say that the NPL of corporate side is very, very low in VIB, but that's the area that we need to keep a close watch on, keeping in mind the strong and fast growth of the GDP in the last year and the coming years. Technology and human resource. We are building the modern digital banking system and application and promoting the people development and talent growth. More the directions for the products and solutions that we are bringing to our corporate customers. So financial arrangements will be important to optimize the risk-weighted assets of the bank. We are driving the structured assets growth through disciplined loan expansion and portfolio optimizations, all the time trying to bring the partner bank to be together with us on the big credit to optimize the return on the risk-weighted assets and leverage the talking power between banks and the borrower. We are widening the client wallet shares via the cross-sell and products penetrations. Transaction banking wise, we are targeting at to embed liquidity flows to strengthen the funding economics and deposit stickiness, generating the recurrent fee income through higher client engagement and cross-selling. In terms of FX and capital markets, which are an area with very strong cooperation between our treasury and the other two segment and division of the bank, which is corporate banking and retail banking. We are expanding our advisory-led, market-driven income through the tailored client solution. we are having the service desk for FX transactions at the branch counters as well, not only at the head office, so that the clients, either the corporate or retail, can have more accessibility to our FX service. We are optimizing client risk exposure with disciplined risk management as well. In terms of trade finance, we are delivering the capital efficient return while maintaining the prudent risk management and enabling the cross-border trade ecosystem through seamless trade and payment solution. And as you know, optimizing the utilization of the equity of the bank is important, and trade finance solutions will help. So for the last line, before I transfer to my colleagues, there are just a few awards that we received in 2006, including the best issuing banks in East Asia and the Pacific by the World Bank Arms IFC for our very active and dynamic activities in trade finance and treasury payments program. The leading global rating agency Moody giving us the upgrade of the outlook to stable during the first part of the year. And very importantly, for the VIB, which is also always focused in the governance and transparency of the bank, we received the IR Awards 2026 for rigorous transparency and corporate governance benchmark. So that's a few slides we would like to bring to you. And now I would like to invite our colleagues to continue with the subsequent part. Thank you.
Thank you, Mr. Wu, for your presentation. We will now turn to the second part of the presentation, focusing on VIB's financial performance, presented by Ms. Ha. Ms. Ha, over to you.
Good afternoon, everyone. Following the macroeconomic outlook and business strategy presented by our CEOs, I would like to walk you through VIB financial performance for the first half of 2026. Overall, the key message of our financial results is quite straightforward. VIB continued to deliver resilient and gross-balanced growth in the first half while maintaining profitability, operating efficiency, and a solid capital position. Let me start with the key financial highlight. At the end of June, total assets reached 581 trillion VND, up 4% year-to-date, while total credit reached 397 trillion VND, also up 4%. On the funding side, we achieved stronger momentum, with customer deposits increasing 8% year-to-date to 317 trillion VND. This provides us a stable funding base to support further growth in the second half. Importantly, our profit before tax reached 5.2 trillion VND, increasing 3% year-on-year. This growth was achieved while maintaining a good asset quality, with our NPL ratio at 2.1%, slightly improving from the end of 2025. So overall, we enter the second half with larger balances, stronger funding, and resilient profitability. Moving to the balances in more detail, our approach in the first half remained disciplined rather than volume-driven. Total lending increased to 397 trillion VND, representing around 4% growth year-to-date. One important development is the continued diversification of our lending portfolio. Historically, VIB has been strongly positioned in retail and SME banking, While this segment remains the core of our franchise, we have gradually increased the contribution from corporate and institutional customers. This gives us a more balanced portfolio and greater flexibility to optimize growth, risk, and return. On the funding side, customer deposit grew 8% year to date, twice the pace of lending growth during the first half. This provides sufficient liquidity and funding capacity to capture stronger credit demand in the second half. Looking detail in the lending portfolio, I would like to emphasize 2 points. First, as you can see in the left chart, our retail and SME portfolio remain highly secure and diversified, and mortgage is the largest component, account for 54%, with nearly 100 secured by red book and pink book, and typical LTV ranging between 50% to 70%, and popular ticket size ranging from 2 billion to 4 billion. So I think this is a diversified structure. If you can see in the right chart, our corporate and institutional portfolio is also diversified too, across industries, including manufacturing, financial institutions, real estate, and transportation. So overall, our lending growth is well diversified across both product and customer segment. On the funding side, VIB continue to demonstrate a strong deposit gathering capability. Customer deposit grew around 8% in the first half, outperforming in the industry in average. At the same time, we maintain a meaningful low-cost funding base through CASA, super account, and foreign currency deposits. This combination provides us with sufficient funding for the future growth while helping manage funding costs and protect our margins. And all of that bring me to our P&L performance. As you can see in the waterfall chart, for the first half, total operating income reached 11.2 trillion VND, up 16% year-on-year. There were 3 key drivers. Firstly, net interest income grew 9% to 8.4 trillion VND, demonstrating a resilience of our core banking business. Second, fee income saw a very strong momentum. Net fee income reached more than 3 trillion VND, nearly 4 times the level of the same period last year. This reflects an increasingly diversified income base beyond traditional lending. Thus, we maintain a strong cost discipline. Despite continued investment in technologies, in digital capability, branding, and people, our operating expense declined 2% year-on-year. As a result, our PBT profit before tax reached 5.2 trillion VND, up 3%. Despite significantly higher provisioning during the period, return on equity stood at 16% and return on assets at 1.3%. I think this is at a reasonable level in the banking industries. So the key message is that our BBT performance supported by strong revenue growth, fee income momentum, and disciplined cost management. These trends are also reflected in our key profitability indicator. So first of all, our NIM remains resilient at around 3.1%, despite very competitive interest rate environment. Non-interest income continues to make a meaningful contribution to our revenue mix. At the same time, we manage our operating efficiency very well, with our CAR declining to 34%. comfortably within our target range. And overall, we continue to maintain resilient profitability and good operating efficiency. Let me brief thought on capital. Our equity reached approximately 48 trillion VND, compared with around 33 trillion in 2022, providing a solid capital foundation for the future growth. At the same time, we have maintained a consistent combination of cash and stock dividend, and our objective to maintain a right balance between shareholder return and capital for sustainable growth. So let me conclude our outlook for 2026 in terms of 4 pillars: growth, productivity, risk, and profitability. In terms of growth, we expect to utilize fully credit growth licensed by SBV at around 12.2%, together with deposit growth around 15%. CAC is also important business of retail banking, so we expect to grow 20% to 30% in both volume and spending, and we target our ambition to target customer base to reach nearly 10 million customers at the end of this year. In terms of productivity, our CAR range from 30% to 35%, despite intensive investment in digital technologies, branding, and people. And we continue to linear operating model and productivity enhancement. In terms of risk, we target our NPL ranging around 2% and to recover from 2 to 3 trillion write-off loan as a extraordinary income in this years. So the last but not least, our profitability, we keep the target for profit before tax for the full year as committed to ACM around 11 trillion VND and maintain return on equity around 20%. So let me leave you with the 3 key messages. First, growth will remain resilient and increasingly diversified. Second, underlying earning momentum remains strong, supported by fee income growth and disciplined cost management. And third, our funding and capital position provide a solid foundation for the further growth in the second half. Of course, sustainable growth must go together with disciplined risk management. So with that, I would like to hand over to Chief Risk Officer to will take you through our asset quality and risk management performance. Thank you. See you in Q&A section.
Thank you, Ms. Ha, for your presentation. And let's move on to the next part, where Mr. Zong will share with us VIB's risk management. Mr. Zong, over to you.
Good afternoon, everybody. So let me present you the risk management session with 3 key topics today. The first one, I would like to update you on how we implement the Basel III capital adequacy standard, which is so-called like Circular 14 that issued in the 2025 June. And the next part is on the liquidity risk framework under the Basel III. And recently, you know that there are many drafts or many discussions in the market about the impact to the banking system. And finally, on the credit risk trend. This slide just to try to update you on how we implement the Basel III capital adequacy ratio. So we start on the preparations from 2019 on the implementation of the, the capability transfer enhancement. We work with consultancy to give our staff the knowledge and the capabilities. We do the data preparation, including the cleaning, classification, so we can have a good database for the IRB. And importantly is that we apply in our day-to-day credit activities in VIB, and especially we just focus on retail because we believe that the retail is suitable for the IRB due to the high quality of data and the number of the loan portfolios. And in 2025, we are one of the very first banks that have completed the standardized approach under the Circular 14. And later on, I will give you the what is the ratio. And we have officially applied the Basel III Circular 14 from the end of December 2025. And we also complete the most of the requirement for the IRB. And what we have been done in the first quarter is that we have worked with the Big Four consultation firm, which is Deloitte, to complete the first validated report on IRB, because it is a requirement under State Bank Vietnam. And we plan to complete the next validation report on 2027, because the State Bank, they asked for the 2 years validation. And finally, we plan to submit to the State Bank Vietnam the official application for IRB approval around 27, and we can get the hopefully you can get approval after 1 year. This slide give you the okay, what's the difference between the standardized approach under the Circular 14 Basel III and under the Basel II Circular 41. So you can see that there are two key impact which is quite positive to VIB. Under the Circular 14, we got the capital adequacy ratio of 12.2%, increased by 0.9. And there are two key components. The first is the credit risks, and the second is operational risk-weighted asset. And I would like to give you a little bit insight. One of the key changes in the Circular 14 under the Basel III is that the State Bank of Vietnam, they differentiate between the so-called qualified collateral and versus the unqualified collateral for the retail mortgage loans. And of course, with the qualified collateral, the mortgage loan can get a much lower risk weight ratio compared to the unqualified. And I can tell you a little bit more on the, what is criteria for the qualified collateral? For qualified collateral, the first thing is that the collateral need to have a clear title of ownership, like in Vietnam we call like a red book or pink book. And the second thing is that it should be evaluated, or the value should be evaluated by an independent firm or independent department versus the differentiate from the approval people. And thanks to the VIB prudent approach in the past several years, we have almost a very small proportion of unqualified collateral, like under construction loan. We focus mainly on the secure with the qualified collateral. So our risk-weighted asset for the credit risk increased by 0.3% for retail. And also for the operational risk, the State Bank Vietnam, they implement the so-called like a standard approach with the internal loss multiplier. So that's why that it got another impact to VIB 0.6. This is a very interesting slide. It gives you a snapshot on, what is the IRB, or like we call like advanced capital adequacy ratio under the IRB advanced approach. And as I explained to you earlier, we first just focus on the retail lending. And when we do the calculation with the implementation of various model, PD, LGD, EAD, then it gives us quite a significant capital saving of around 1.8%. And there's some slight adjustment on the capital. And that's why finally we got the CAR ratio under IRB approach as of the June 26 at 13%, increase from the 11.6% under standardized approach. And actually in VIB, when we implement the Basel III capital adequacy ratio, we do not focus only on the capital saving. And more important for us is that we think that the application of the Basel III standard would give us many methodology to implement our credit risk strategy, especially that when we do the calculation of PD for each customer, expected credit loss for each product or customer segment. We can understand more the profile, the risk profile, and then we can apply like risk-based pricing or the route to the many product or the customer segment, so we can work out a good strategy for the credit risk. Next slide is on the liquidity risk framework, and this is under the many discussion in the market on what is impact on the latest draft on the Circular 22. Actually Circular 22 is focused on liquidity risk, but it was issued in 2019 and almost 5 years past. And now the State Bank Vietnam, they try to bring the standard closer to the Basel III liquidity risk framework. And I can summarize with you the key changes is that the first, for short-term liquidity ratio, the State Bank Vietnam, they almost apply the nearly full version of liquidity coverage ratio compared to the previous version, kind like short and simple liquidity coverage ratio under Circular 22, the old one. And for the long-term liquidity ratio, this is a very important thing. The State Bank Vietnam, they bring the net stable funding ratio to the standard, to the new amendment of the Circular 22 to replace the ratio of the short-term funding used for medium and long-term lending. And I would like to give you the key changes is that, under the Basel II or under the Circular 22, actually, it just focused mainly on the contractual date of the each, like a deposit, like 3 months or 6 months. And it does not care about actually who is depositor. And when we do our internal calculation and modeling, we understood, for the retail investor for retail depositor, it's much more, like sticky than the corporate deposit. And that is in line with the Basel III standard when they apply different, like a haircut or different the runoff factor to the different type of deposit depends on the depositor, depends on like the characteristics of each deposit agreement. And the final one, another change is that they apply the so-called like credit to deposit ratio to replace the loan to deposit ratio. And the key change here is that they remove the certain type of deposit under like interbank market. And basically, we have been working very closely with the Basel III, with the State Bank Vietnam on this Basel III liquidity risk framework. And now, based on the latest draft version, there are both positive and negative impact. But in my view, we got more positive impact because State Bank Vietnam, they changed the net stable, they replaced the short-term funding used for medium long-term funding by net stable funding ratio, which is reflect better our structure of deposits because maybe we follow the retail strategy. And I mean, the large portion of our deposit come from retail investors. So this is actually give us a good and very positive impact. And for the other, like a negative impact, we think that is quite small. And like a CDR, they remove the interbank deposit, which I think that's fine. That's okay for us, and we can control well the ratio. And we believe that once the circular issue, probably maybe within this quarter, we should on the way to ensure compliance with this circular without much impact on the business. This just tell you that, okay, what is the roadmap for the new Basel III liquidity risk framework? So basically, under the latest draft version, the official effective date is on the October 28th. So, I mean, the banking system, they have more time to prepare to, change the asset liability structure, so better to reflect or better to comply with the LCR ratio, CDR, and net stable funding ratio. And you can see that each year they increase by 10% or 5%. And the interesting point is that the State Bank Vietnam, they allow the bank that who can comply with the certain ratio. So you can register with State Bank Vietnam and you can replace one. For example, if the VIB, we have a net stable funding ratio of over 100%, and okay, we need not to comply with the short-term to medium-term, long-term ratio of 14% now. So I think that is an encouragement for the bank to comply soon with the Basel III standard. Wow, this is just a slide that tell you the current circular 22 means the O1. So we optimize and to support the business and meanwhile still comply with the State Bank Vietnam. Okay, next slide is on the credit risk. So you can see that the CAT2 and the NPL ratio. So basically, we still maintain our prudent approach, and the CAT2 has the steadily on the downside, which is about like 1.84% in the last 2 quarters, slightly pick up from the 2025. And you know, one of the key reasons is due to the rising interest rate, I mean, both on the deposit and the lending. So that impact to the cash flow of the certain segment of the retail and corporate. But the NPL balance and NPL ratio, we still keep at very low, 2.1%. This is a further breakdown between the retail and the corporate lending. And so, you know, on the retail side, the good news that, okay, we can still keep the downtrend, and you know, the CAT2 is substantially lower than the period of 2023 due to the COVID period and the certain sluggish growth of the economy there. And the NPL, the CAT3, is slightly picked up from 4.1%, you know, mainly due to the impact of the rising funding costs on rising the lending interest rate. On the wholesale, there's small pickup in the NPL, but I think that is quite natural because also the, you know, due to the rising inflation, the tension of the trade, I mean, the war between the Iran and the US and so on, and then there's some customer impact by the cash flow suspension. But we forecast this, and we still think that we can control well. The final slide is that, you know, on the provision and the write-off. So we know that in Vietnam, the State Bank Vietnam, they apply quite strictly on the provision. It means that for the loan, even with a good mortgage, good collateral, but after 2 years, you need to put the full provision for the outstanding debt. So that's why that, you know, you see that we have to keep steadily around 1.2 or 1.3 trillion on the provision. But again, this will be one-off income in the future for VIB. And in the second quarter of 26, you can see that we have recovered 434 billion, which is increased from the first quarter due to the tax seasoning period, you know. And we forecast that thanks to the change in the, you know, in the law credit institution, let's call the Resolution 42, we can accelerate the recovery of the write-off portfolio, and this will be a future profit for the bank. So that's it. Thank you, and I'll see you again in the Q&A session.
Thank you, Mr. Dung, for your presentation. For our final segment, Ms. Tong will share with us VIB's business performance. Ms. Tong, over to you.
Hello, everyone. I would like to bring you a little bit deep dive in the retail banking strategy, following with our CEO presentation about the strategy of the whole VIB. We believe that RB in the part of the very important business of VIB. So now, go a little bit deeper in the RB strategy. I would like to share the how we can get that. As you can see, we base on the 4 core segments that we would like to build the foundation for the RB strategy. And on that, with the 4 core segments, we're starting with the youth banking. Focus more on the student and the first jobber and provide them a very flexible solution with the subscription banking and more about the instant loan, like the first loan in lifetime for them. Secondly, we have the core banking segment. That's what we built for the last, 30 years ago, right? So far, we still build a lot of like the solution from funding, lending, gag, and more solution about the transactional banking for this segment. And we believe that bundling for the whole of the total relationship based on that, that's the way we would like to build for this kind of segment. The third one, of course, our gag business is still very helpful product for our own of the bank because it have the very kind of like transactional banking product. And so far, we target to the hyper-personalized solution for this kind of segment. And the last one, the privilege banking, that's we just launched last year, and now we revive and reborn in the market for this year, March this year. And we believe this kind of segment is very healthy and grow very fast in the market right now. And would like to build the Tyler kind of like the solution based on their kind of like financial hold of the AUM for them. Beyond the 4 pillars, we are expanding into the 3 new role frontiers. The first one, the business banking. The second one is the family banking, and the last one, the junior banking. This kind of banking serving for these very special and niche segment. And we believe in capturing the financial need for this kind of segment remain the underserved of the market right now. And we can build for them the total relationship, building the solution for them. The segmentation framework was allow VIB to deepen penetration and value capture the customer proposition rather than just only rowing on the volume. And now we selected a little bit kind of like very outstanding solution in this presentation to you about the retail banking strategy. First one, we would like to introduce the mass gag in the third part of the core segment I just presented to you. This is the first subscription banking credit gag in the market. It's built in the concept that for the customer, they can choose what they can building and starting using during the lifetime. For starting with the starter, plus, pro, and elite, with the cashback scale, they can up to 10% based on their chosen, and building corresponding with the subscription fee. The key differentiator for this kind of product is the flexibility of the gag. Customer, they can upgrade their usage plan anytime, anywhere, allowing by the digital platform, scalability building by the technology from VIB. This model lets VIB capture the recurring subscription revenue. It will kind of like the same time right the spending of the gag directly contribute to the gag revenue growth that you may see in the presentation of the performance of the fee income of VIB remain in the H1 2026. After 3 months of launching this gag, we reached to 100,000 gag. This gag accounting for around 38% of the new gag acquisition. The next one is also the very unique and flagship product from the gag business as well. Actually, this product we just launched today and very kind of like different and unique in the market, evolved with the customer life journey. And you can see that the concept of the gag, that it's just like one gag for lifetime and up to 9% cashback across like a lot of kind of demand of the customer. We change in the way we design the product. We don't design one product for all. Right now, we build the product based on the customer segment. And this gag is special for the affluent customer. And we tie up with the VIB privilege banking as a bundle solution for the customer. The customer, they don't need to issue a lot of gag anymore. They don't need to print a lot of gag anymore. And they don't need to ask for the upgrade anymore. Because the gag will be upgraded automatically by the bank. And you just need only one gag for the whole of the life stage of the financial services. And of course, as a retail banking, we believe that lending and funding at the base. And right now we build for that with the core segment customer. but we upgrade a little bit on the way how we can serve our customer. Rather than just starting from the product concept, we design the journey around the customer full financial needs, starting with the deposits or the lending, and they will kind of like optimize based on their demands with the transactional current account banking. And after that, they can get the CAC with the benefit for the payment. And finally, they ultimate the whole of the benefit with the relationship for the retail banking on that. So these kind of like the bundle solution, we bundle and kind of like design the whole of the benefit, maximize for the customer based on the total relationship they have with us. Detail about the Plus, Pro, Elite subscription structure lets us bundle all of the things and tailor-make for all of the customer based on the seamless experience from their chosen, of course, from the digital channel as well. Next is the business banking solution. If you can see that in the structure of the RB retail banking strategy, business banking is a new front, kind of like new move of our kind of strategy, because we just joined this kind of segment 2 years ago. And we believe that these kind of segments like the household and the micro SME, very big in the market, but underserved. And we believe that the comprehensive solution suits for them. Now it's not like fulfilled and provided by all other banks. So now we build a whole solution with the 3 pillars, from funding to lending and the payment solution. With the advantage in the payment industry starting from the CAC business, we coordinate with our kind of like partner and provide the payment suite for all of the merchants and their customer. For example, from the QR code payment to the support service, and right now it's just a bit base. It means the customer, like the merchant, they can accept the whole of the payment, like the CAC payment, account payment, QR code payment, with very minimum zero cost, and help them to optimize the cash flow, especially for the compliance with the tax regulation. This is the full transactional banking play, not just funding capital, and embedded to the VIB customer daily payment. And we believe that this kind of solution will help us to increase the fee income and the cash balance. To build with this kind of like business banking, we believe partnership is the mandatory. And to scale this strategy in June, we just cooperate with the Vietnam SME. This is the Vietnam Association of the Small and Medium Enterprise, hosting with the whole of the financial solution, including our strategic partnership Visa. This partnership, they can bring us to the ecosystem of the whole of around more than 65,000 members all around the nationwide, and they can approach and receive the bundle of the solution I just presented before. And last one, I believe that the whole strategy is here just all about the result. And you can see on the slide the tangible result, what comes from the segmentation strategy. And during the H1 of the 2026, we increased significantly with the customer base, around 7.8 million customers. And one more thing that we can see that the activation, like the active customer, increase more than the customer influx, meaning that we, at the same time, are growing with the quantity, we grow with the quality as well. And look into the acquisition channel mix, you can see that the online channel contribute and hybrid channel contribute more than 95% of the new acquisition, meaning that the technology and kind of like the digital transformation make the successful evidence. Because the hybrid, that means the sales fraud, they use the digital tool to acquire the customer. So taken together, the 1.5 million customer increase, including 100,000 B&B, it means the privileged banking customer, we can see that the growth rate is very fast and sustainable. And we believe that the basic and our confidence that to make the strategy come true with the strategic target. That is just like presented before by the CEO. In summarize, I think that the retail banking strategy right now of VIB have the transformation state. We believe that growing the balances is not now the first and the only target anymore. Now we would like to increase with the quality, the customer value role, and kind of like the thing of the transformation. And we believe that this is the one we would like to lift up for the next 3 years in the retail banking strategy. Thank you for listening and see you in the session of Q&A. Thank you.